Okay, just want to do a short video. This is after the close of trade on Tuesday the 30th of March. I want to just discuss the similarities between the Elliott wave principle and what I see in my version of the Hilbert sine wave, the better sine wave indicator. And this is a 500 tick bar chart of today's trade on the E-mini. This is the continuous contract at ES on TradeStation. You can see the high of the day was made up at about 1174 up here, and we've got this end of trend warning signal here on the better sine wave indicator. And the low of the day was also made on an end of trend warning signal down here at about 1165. And I think the better sine wave is a fabulous indicator for just showing these kind of extremes and likely turning points in the market. But effectively, the Elliott wave principle and what I'm seeing in my indicators are measuring the same thing. If you're not familiar with the Elliott wave principle, the preeminent thinker on this is Prechter, and he's got some great books discussing the Elliott wave theory in great detail. But effectively it talks about a trend move being divided into 5 waves, subwaves, where there's 3 major waves with 2 kind of retracement waves during a trending period. So if we look at from this high to this low, we have a first wave here, if you like, this first kind of impulse direction. We get a little bit of a retracement, so that probably count about as a wave 2 type move. And then we had a strong trending move here. This is a wave 3 move, and typically wave 3 moves are the strongest and largest moves in a trending pattern. We get a little bit of a final kind of pullback here, which will be classified as a wave 4, and then the final push is here a wave 5 into the end of trend warning signal here, and that kind of signifies the end of the move, and a reversal trade is likely from there. You can see the end of trend warning signals happened a few times during today's trade, and essentially they're all looking at the same things. So you might look at this move early on in the day as kind of a wave 1, a wave 2 maybe. Wave 3 is the strongest wave, which is this kind of strong pattern in this advance. We then had a wave 4 pullback, and then an end of trend warning signal. This is the 5th wave into this kind of topping move, and then the correction. Similarly, on this pattern here, you might see this is wave 1, wave 2, wave 3, wave 4 into the pullback, wave 5, end of trend warning signal, and maybe into this move here. Now, we didn't get a clean end of trend warning signal here because the pullback level at this point was broken. So in my indicator, that doesn't classify as a clean end of trend warning signal. But similarly, wave 1, 2, 3, 4 into the pullback, and then 5 into what should have been almost like an end of trend warning signal here. So the interesting thing I think about the Elliott wave principle is it really is trying to find some analytical way of measuring human psychology, and there are definitely different types of traders that will be trading each of these moves. The people who are kind of getting into this move in this first wave down at this stage here would be the early movers. There would be the professionals that have taken hold of this change of trend early on, understands its significance, and are trading this kind of breakdown. Then we get a little bit of indecision here in this second wave, and then the majority kind of join in this third strong wave here. This is where the majority realize that yes, in this particular point, the low of the day was broken after we had a test at this point here. The low of the day was broken, and everybody kind of gets on board. The majority get on board the move at this stage, and then this last kind of final push down here is the laggards. These are the kind of the amateurs who are way too late into this move and expecting this move to go a lot stronger, and they get into the move way too late, and eventually it just peters out at this stage and starts to reverse. And it's similar to me to the some of the work that was done by Geoffrey Moore. I don't know if you remember, years ago there was a book called Crossing the Chasm, all to do with the adoption of technology, and that he saw that there were kind of 3 major waves of people adopting technologies. There were early adopters, the people who were getting into this move early. Then there was the majority who kind of took on technology during the craze, if you like, kind of the main majority. And then the the laggards in adopting technology, and they're kind of these ladder amateur type traders here. So I think there's quite a lot of similarities between group psychology, not only in everyday things like adopting new technologies, but also the way traders, different types of traders, trade, and I'm seeing the same patterns in a particular indicator which is based on cyclical and trending patterns that someone who's using an Elliott wave type technology would be seeing in their trend moves. So I always think of this pullback into an end of trend move as the laggards. This is the wave 5 move. This is the final exhaustion move where the amateurs are finally getting on board, and the thing is likely to run out of steam as soon as they've traded. And then here, similarly, this pullback into an end of trend warning signal here is kind of the end of the move, and that's the wave 4 and wave 5 final move in these markets. The trick is to try and pick when we start to move into a trend. So it's like this piece of the move, the wave 1, if you like, and wave 3 are the most meaty parts of the moves that you want to get on board. You either want to be early and reduce your risk by putting your stop pretty tight onto the turning point, or you want to get on board the large wave 3 most powerful move and be out before it starts to reverse at the end of trend warning signal here. So if I just pull up the better momentum indicator on here, you can also see how the buying and selling exhaustion volume also kind of plays out here. So again, looking at this move from the high to the low, the end of trend to end of trend here, we had this final push in this wave 3 here was associated with a maximum kind of selling pressure at this point here. So you can see that this is an exhaustion type move. This is where everybody's kind of got on board at this stage, and this rounding out pattern, this end of trend warning signal here is happening as we get bullish divergence. There's just lack of selling taking place at that point. Eventually the market kind of turns around. Here's wave 1, this kind of strong move down, which is often associated with again some type of exhaustion selling move. This is the first push down is associated with a strong move down. We get some type of retracement here with a couple of divergence patterns, and then the move kind of gets underway. So you can associate the quantification, if you like, of the buying and selling activity using the better momentum indicator kind of plays in nicely with this kind of wave 1, 2, 3, 4, 5 kind of type wave pattern. So there we go, just a little bit of discussion about Elliott wave principles and the end of trend warning signals and the better sine wave indicator. In terms of what happened today, we had a pretty good day in terms of trading. I was in and out early on in the day with just 3 points. Unfortunately for me, this really great move in the day that started off with an end of trend warning signal at the high here, I wasn't able to take that because of on my rules, day trading rules, a couple of things were missing from my signals. So one of the things that I look for in a change of trend scenario, this is my 3-day trading time frames, 500, 1500, 4500 tip bar chart. One of the things that I'm looking for in my highest time frame is a professional bar to show that there are professionals taking profits and reversing and going short, and I didn't see any professional bars up at this point at 1174. When we came down even to the 1500 tip bar chart, there were no professional bars here. There were on the the 500 tip bar chart. We had Rambo patterns showing that this last move was being pushed up by the amateurs. We had some professional activity here, and then when we came back to the end of trend warning signal here, again we had some professional bars and the move changed. So I wasn't able to take this move because I didn't see any of those professional bars. However, when we did come down to the low of the day here at 1164, everything was in place for a trend change move. We'd had professional bars coming in here, we'd had exhaustion selling at this point, and that allowed a good signal from the end of trend warning signal. I actually wasn't, because I'm trading in Sydney, I wasn't awake for that. I took my early trade during the early part of the morning, and it was based on this first move in the day. We had 3 cycles lining up together on the 2-3 time frames. So this cycle, low, cycle, low, cycle, low. We had exhaustion selling at this point with a Rambo pattern, series of Rambo patterns here showing that these are amateurs expecting the market to go short at this point. We had professionals stepping in, and then the market broke above 1170 at this point and then raced away for a 3-point move. So that was quite nice for me. But after that, it would have been nice to have taken this end of trend warning signal for me, but I didn't see these professional bars in these time frames, and so I wasn't allowed to take that trade. Anyway, so there we go. Hope your trading is going well, and looking forward to a little bit of a break over Easter. So good luck with your trading over the next couple of days.